While I'm doing this, I think you're probably wondering, an important question, which is, should I buy Bitcoin? When you buy a new car, they sell you a wax package that is between $100 and $200, and so many people go for it because at that moment, it's such a small percentage of the car. It's so easy to add another hundreds and a couple $1,000s onto the price of a car that they really get you with all kinds of products that really have very high margins. And you can easily find $200 wax kits for waxing your brand new car. But then after the same car is 6 months old, you are not going to spend $200 on the wax kit. It's just a purchase. It's just a behavioral economic thing. They know they have you with the extras. You're probably wondering, an important question, which is, should I buy Bitcoin? Or should I buy Litecoin or Dogecoin or Ethereum or Ethereum Classic or EOS or Cardano or Tezos or Cosmos or Dash? I happen to like Dash. Or Polkadot maybe. There are a lot of coins to buy at places like Kraken, and I have been involved in cryptocurrencies and money and macroeconomics for 5 years professionally, and I want to explain about the efficient market hypothesis, the EMH, which is that there's a lot of information out about most of these things: stocks, bonds, options, and most of these markets are pretty well traded, even in crypto, especially in Bitcoin and Ether, but also in many of the other coins. The way I think about it is, fundamental analysis is over. That's the Warren Buffett approach, and there are thousands of books on fundamental analysis. And why? Because everybody's got the same information. So if you study Claude Shannon and information theory, you realize quickly that once everybody has the same information, that markets are going to price things very efficiently, and you can't do better. So the way I think of it is that the chance of any of these traded, now I'm going to buff, well-traded financial products doubling or getting cut in half is the same. It's about 50-50. That's today's price. Today's price is the midpoint between chances of doubling and let's say inside of some period of time. It depends. If you're thinking about Apple stock really has no chance to double inside of a year, but it could double in 5 years. So it depends. If you're talking about something like Ether has a chance to double or be cut in half inside of about 3 months. And so this time window is about, proportional to the market cap and to the amount of trading going on. And you probably just don't know, which way. If it does go up and you thought it would go up, that's probably luck, because other people have more data than you do, and they have faster computers and more serious technology, and they're the ones who probably are eating your lunch in the market, and they know what trades to put on, and there are very few of those. So this is what Robin Hanson calls a market of wolves and sheep. In the stock market and any commodity market, foreign exchange, crypto, options markets, any of these markets are markets of wolves and sheep, and most of the time you are the sheep. There are very few wolves one wolf can eat a lot of sheep. And people use what's called technical analysis. So fundamental analysis is over because everybody has the same information. Technical analysis has to do with charts. They have lots of names for these charts, and as far as I'm concerned, you might as well just use astrological charts, because the charts are called a frequentist approach. You know, I saw something go up to 200. I thought I'll just wait, you know, and then it comes down to 100, and then you go, should I buy it? Well, when it was at 200, I thought, well, if it goes to 100, I'll buy it. But now that it is at 100, the world is different. So this is what Richard Olson at Licka says. Now, once there's a price move, now there's a new normal. And the new normal may have different factors than you were assuming back when you had a target price, a target entry, a target buy or sell price. You know, if it's trading at 200 and you say, yeah, sure, if it gets to 100, I'll buy that. But when it does get to 100, there's the thing to understand is that it is now priced halfway between doubling and being cut in half again. And that is always true. Even if you're not looking at it, it's always moving, so that if it moves up, more people think it has a chance to double than to be cut in half. And if it moves down, more people think that it may be cut in half. But that price resets, and we're at a new normal where conditions, the inputs have changed, and the patterns of frequentist traders don't apply. It just doesn't make sense to say, well, I've seen it here before, or a lot of people are waiting and there's a trigger point, there's going to be resistance, and you see lines boxing in the price time series of the price, and it's just nonsense. So it's just, might as well just throw darts at the wall, or use astrological readings, or chicken entrails, whatever you like, because all of it, 100% of frequentist or charting or technical analysis is nonsense. And you're going to meet plenty of people who will tell you that they've got the secret. And if they've got the secret, why aren't they quiet about it and just executing it? You can make billions of dollars if you have an edge over other people that lasts. Now, the wolves are people who work very hard, usually with very serious computers and often with very short connections to the market and program trading, who have just slightly more information than everybody else. The sheep are not very good. The sheep read the newspaper, they hear it from their friends, they go golfing and somebody gets a tip, and the sheep just read it on, you know, Cointelegraph or newsletters, whatever you know, blogs, wherever you want to get your tips about the patterns and the heads and shoulders and the dips and so forth. And even the Motley Fool guys, if they really knew what they were doing, they would just trade their own account. They're just trying to sell you their product. And that makes you a sheep. Now, the good guys, the wolves who have an edge, often the edge does not last very long. And so they have to find a new edge, and they'll tell you this. Their trade might work for some period of minutes or hours or days or weeks or months, generally not years. And then the magic is gone. Why? Because everybody else is caught up. And if you read Michael Mauboussin is a very important writer, analyst, thought leader, I would say, who says that when the level of skill goes up across the board, then luck becomes a more prevalent determiner determining factor of who wins and who loses. And this is true in poker, this is true in sports. When the general level goes up, the edge goes away. Now you might remember the backstroke. I don't remember the guy's name, but this was 20 years ago. A college kid, decided to read the rule book on the backstroke and decided that it would be legal for him to jump in the water backwards, arch his back, and then flutter kick underwater half the length of the pool or more, holding his breath before popping up and going into the backstroke. He won I don't know how many gold medals in a short period of time, in a period of about 3 or 4 years, because he pioneered it and he crushed the competition with that. It wasn't even close. The guys in second place were just, shaking their heads in disbelief. And he broke many world records. And then what happened? Everybody figured it out, jumped into the water, flutter kicked, and the guys who could flutter kick and hold their breath the longest were the backstroke kings. And that worked for a couple of years while they fought it out, and then just everybody had that skill. It just now leveled the playing field, and once again, the time between first and second place is now measured in hundredths of a second again. Everybody caught up. It's the same at poker. When you're at a table of people who are as good as you are, luck is the determining factor in the outcomes of a tournament. And that's why most major players, the guys who have the World Series of poker rings and stuff, they spend quite a bit of money backing each other and spreading the risk so that a player will enter a tournament with a portfolio of 7, 8, 9, 10 different other players, and he will pledge to spread his winnings out if he wins, and he'll take part of their winnings if they win. I'm going to do one more coat. And that's the state of the art now, because when everybody is that good, and I'll probably talk about poker another time because there's a lot of interesting things. Annie Duke has a lot of really interesting things to say about poker. There's no edge when everybody at the table is at the same level, and that's why we say that the way to make the number one determining factor of whether you make money playing poker is which table you're sitting at and whether you're the fish or not. And if you can't tell if you're the fish, then you are the fish. And most of the good players won't play with other good players with much real money at stake. They only do that at tournaments, and the winner is determined largely by luck. There are no real kings in poker anymore. There are no real dynasties at the top. If you look at the ring holders of the World Series and all these other world championships of poker, they take turns, they trade. There's just, you can't predict. There's a dozen people who all are at the same level, and they all have the same basic winning streak or winning record, as long as they're playing against each other. They might as well all just split the purse because no one can tell ahead of time. And they often do. They often behind the scenes level it out so that nobody really takes all the winnings. It's just a TV spectacle, and they all know that they will profit no matter who wins. And then that gives them, and that's pretty good money at the top. If you can get into those pools, you can make a couple $100,000 pretty easily at the top of the ranking if they let you buy your way in, and then spend a whole year making a couple $1 million, and that's more or less what they do now. It's not illegal, it's just that there's no edge. Now, if you think, going back to your question about should you buy something or sell something, you could think about it like this. Well, I'm a long-term buyer, I'm a long-term hodler, we say, in cryptocurrencies. And so then ask yourself, all right, well, let's say it does double or get cut in half. because those are equally likely. What happens on the next order? What are the chances that it doubles again or is cut in half again? Now, I would say, and this is, getting toward the end of 2020, I would say that Bitcoin has much more upside on the second order than it does downside. So I can't tell you Bitcoin will double or be cut in half in the next 6 to 12 months. I think it's equally likely, whatever the price is, that either one could happen. But I think long term, over the next 10 years, I think Bitcoin has a much better chance of doubling twice or 3 times or 4 times. And so that, to me, makes it a hold with risk, with the understanding that there's 50% chance that you could buy in at, I think right now it's at $11,700. You could see that go down to 7,000, 6,000. Forget about the charts, forget about the graphs with the lines and the resistance levels and all that nonsense. It's 50% chance to go down in half, okay? And it might or it might not. And it's 50% chance to double, and if it does, you're still in a new normal there, and that doesn't really mean much. Should you sell? Well, if you're a long-term hodler, if you're a long-term buyer, I would say that you build a portfolio of such things that are as uncorrelated as you can get. That's not easy. You don't just buy one, and you hold for a target period of something like 5 to 10 years. And I'll say this about Bitcoin as well. I think it could easily be $100,000 in 10 years, but I also think it'll probably be zero in 20 to 30 years, just because I think there's just going to be other things that are better. There already are other things that are better. I don't happen to I like Stellar, by the way. I think that's pretty well governed. I don't happen to like Zcash, but there's Algorand, which I think is quite good. That's based on zero knowledge proofs. The Zcash, I think, will just be too niche and will get outlawed eventually, probably. Algorand may have a chance. It's got more practical uses. But I would put together a portfolio of these things, realizing that almost every single one of them correlates very, very closely with the price of Bitcoin, just because no one can tell the difference between any of these things, and they just buy them and sell them. When they get scared, they sell them. When they see their friends making money, they buy them. No particular reason. It's just a herd. It's just the sheep. But if you want to beat the sheep, you can. Without having an edge, without having Warren Buffett, fundamental analysis of Bitcoin, which doesn't exist. Anybody who has a 20-page, analysis of Bitcoin and the SWOTs and the competitors and all that's just nonsense. But you could just buy into it thinking that the second and third order chances of going up or down are probably favoring up rather than down. That's probably true of Ether, especially if we can get Ether 2.0 really working and we can get the proof of stake stuff and the economics to work, because right now I don't see any incentive to stake very many things at all. So proof of stake needs more work. I think it's the game theory and the fundamental to the technical part is fine. The coding is generally getting there, but it's got to be worth your while to stake. And then you limit your risk by managing your money, not by being so smart about what you're picking, not by being so doing so much research and deep dives and listening to analysts and other people who don't know anything, but simply by money management. And that's where we can have we're going to have another discussion about money management and Claude Shannon. And in the meantime, I'm not a financial advisor. This is not financial advice, but long term, in the next 10 years, I think Bitcoin is probably going to double several times with lots of volatility. So hang on to your shorts. And I think in 20 to 30 years, Bitcoin is probably gone. We'll have much better products than Bitcoin. I would also like to talk about gold, inflation, money, and other topics as I polish more cast iron. So, send me your table and a bit of wax, and I'll polish it up for you. make another video and talk about the efficient market hypothesis, really formulated by Eugene Fama. And he's very difficult to read. I wouldn't read his writing, but you could read books about him. There's also a fascinating book by a journalist called The Myth of the Efficient Market, something like that. I don't know if that's the Myth of the Efficient Market, which is a really interesting book. But I would also read Michael Mauboussin, The Luck Equation. Actually, I have a bunch of these book recommendations. You can just come to permissionlessfinance.com and look at the book section, book list. If you have any questions about those things, you can send me an email. You can leave a comment, and I'll keep building stuff and talking about the world, and I'll keep making mistakes, learning from them, and try to teach a few things that I know.